tax fraud inquiries, Code of Practice 9. These have piqued my interest since working in tax. I can't even begin to imagine some of the tax frauds that must take place. There must be some crazy stories. This episode will help you better serve your clients should they be caught up in a tax fraud or a COP9 situation. Lucy Sauvage, our guest for this episode, explains what COP9 is, what a typical COP9 inquiry looks like, advice to prevent you messing up a COP9 inquiry, examples of common tax frauds, and she shares a story where one of her clients left HMRC with almost no choice but to pursue a criminal tax investigation into them. You're listening to episode 111 of the Tax Professionals podcast, the podcast that helps tax professionals with their tax careers.
Welcome to the Tax Professionals podcast, the podcast dedicated to helping you improve your tax career. Here's your host, Jack Bonehill.
Hi everyone, and welcome to this episode. We're joined by Lucy Sauvage in this episode to talk about all things Code of Practice 9, or COP9. Lucy is an experienced tax risk and dispute resolution specialist with over 20 years' experience. She's a partner at BDO UK. She works with both individuals and a wide range of businesses, from one-man bands to FTSE 100 multinationals, depending on the issue. She likes to work with clients on an open and honest basis. Her aim is to minimise stress, costs, and disruption for her clients, whilst also avoiding common pitfalls and managing potential risks. I've always thought COP9 sounds interesting, and even more so after speaking to Lucy. However, until speaking to Lucy, I wasn't aware of all the nuances, risks, and what happens throughout COP9 inquiries. There are actually situations where people wouldn't consider themselves to be undertaking tax fraud, but in the law's eyes, they will be. Most of this seems to be where people take inaction where they know that they should take action. There's a lot covered by this episode, and rough timings for each section are in the show notes for this episode at thetaxprofessionalspodcast.com/TTPP111. When you start delegating tax work, usually around manager level, you'll probably experience challenges. Part of this will be you could be a better delegator, and part of it will be how good the person is that you're delegating to. The better they are, the smoother your delegation ride will be. My masterclasses are created purely for tax professionals and are designed to improve the skill level of your tax staff in crucial areas for being a tax advisor. This will allow you to delegate more easily, giving you more time back, reducing stress and burnout. If you like the sound of this, then get in touch with me and we can arrange a chat where I can share with you more about how I can help you and your tax team. You can find me on LinkedIn by searching for Jack Bonehill, or you can send me an email at jack@thetaxprofessionalspodcast.com. Both of these contact details are in the show notes for this episode at thetaxprofessionalspodcast.com/TTPP111. I've been using Kronos online tax resources for over 7 years now. It's almost always my starting point whenever I need to check on some tax rule, legislation, guidance, or case law. To all listeners that work in tax, Krono is offering a free 1-month trial. A link to get this set up is in the show notes for this episode at thetaxprofessionalspodcast.com/TTPP111. Without further ado, let's get to the episode. If you don't mind then, Lucy, just to start us off, could you just tell us a little bit about you and your tax career?
Yeah, sure. So I started my tax career in a big law firm. Actually, I trained and qualified within the business tax division. And shortly after qualification, I was offered the opportunity to take part in a 6-month secondment within the tax dispute resolution team. So I thought it sounded interesting, gave it a go, and very quickly came to realise that it was an area that I really loved and wanted to spend more time in and build a career around that. So I made that role permanent. So I've worked within TDR since around 2003, 2000. I joined BDO in 2008, where I've continued to support clients with their tax dispute resolution needs, and I've progressed my career within TDR, eventually becoming partner 4 years ago. So I'm now part of BDO's tax dispute resolution partnership team.
Yeah, amazing. I actually didn't realise you started in business tax.
Yeah.
You didn't actually ever work for you've never worked for HMRC, have you?
I haven't, no. Many of our team have done, but no, that wasn't my route.
Yeah, I always think the typical route into TDR is to go from HMRC and then move out to it, but you've almost had like your own unique route to it.
Yeah, absolutely. And actually, the partner I worked with originally, he was ex-HMRC, so we sort of had the benefit of his knowledge in hindsight. But as I say, I came from within practice.
Yeah, interesting. I think I would have quite liked the chance to move into TDR or something, because it's part of the job I find the most interesting when we deal with HMRC.
Yeah, absolutely. And
Yeah.
our clients are very interesting characters too.
Yeah. So the topic of our chat today is going to be Code of Practice 9, or COP9 as it's known.
Yep.
Which I've always thought sounds interesting because it's to do with something that, well, I won't spoil it yet, but it'll be obvious why to everyone listening why I think it's interesting shortly. So can you just give us a bit about COP9, kind of what it is, and then we can delve into some different areas around it.
Yep, absolutely. So where it's been identified that a tax fraud has taken place, HMRC essentially have two routes open to them which they can follow. So the first is they could take a criminal route. So essentially they could open a criminal investigation and pursue the tax offender through the court. Now this is quite clearly a very onerous and expensive route for HMRC, so they don't apply it in all cases. They tend to reserve criminal investigations for situations where the crime or the offence is such or is sort of significant enough, I guess, that they feel that only criminal sanctions are really appropriate, or alternatively where they really want to send a strong deterrent message. So criminal investigations are generally reserved for those circumstances. So the second route that HMRC have is to take the civil route. And this is a route in which case the circumstances of the tax offence are investigated, the tax is calculated. HMRC then accept the cash settlement with no criminal sanctions. So the taxpayer will pay the tax due, they pay interest and penalties. And Code of Practice 9 is the process under which HMRC conduct these civil investigations. It's been around for a long time, has changed over the years. Originally, it was referred to as the Hansard process, which is a reference to historical parliamentary records. And in the early days, there was no actual guarantee of immunity from prosecution under the Hansard route. In 2002, changes were made, so the taxpayer actually did get the assurance that no criminal prosecution would be pursued if they entered into the civil arrangements. And then a bigger change was made in 2012. To COP9, quite a significant change, and they moved away from sort of the Hansard questioning route, and they introduced what's called the contractual disclosure facility, and that's the process that we have in place today since 2012. A few changes made last year, but essentially CDF, contractual disclosure facility, is the method that is used under Code of Practice 9 these days.
Yeah.
I suppose just the other thing to note is it's COP9 cases that dealt with a specialist HMRC unit, the Fraud Investigation Service, or FIS. So FIS might open their own investigations, or they might take over investigations that another HMRC department has been looking at, where it's become clear that the offence is a bit more serious.
Yeah. So the HMRC not have to offer COP9 and where there's been fraud. They can just go down the criminal route if they want to. And it sounds like that's where it's sufficiently serious and they want to put a message out there, basically. But everyone else. Yeah,
absolutely. It's at HMRC's discretion whether or not Code of Practice 9 is deemed to be appropriate for the particular circumstances.
Yeah, who kind of instigates it then? Can the taxpayer instigate it, or does it have to be instigated by HMRC?
It can be instigated by either HMRC or the taxpayer. So, yeah, essentially, and as I say, HMRC, they may open an inquiry, a COP9 inquiry based on a number of factors which we can talk about, or the taxpayer can go to HMRC and request Code of Practice 9 being opened.
Yeah. If HMRC then do open it, is it obvious that they're opening a COP9 inquiry, if that's even the right terminology for it, or is it kind of less obvious than that?
No, it is. So if HMRC are opening Code of Practice 9, they will write to the taxpayer and they will include a letter making it very clear that they are intending to, or they are offering the taxpayer the opportunity to enter into the contractual disclosure facility within a Code of Practice 9 investigation. I mean, the essence of the COP9 really is to allow the taxpayer to enter into this agreement where they can guarantee that they won't be criminally prosecuted so long as they disclose all irregularities in their tax affairs. So, they need to be informed that they are being investigated under COP9 to be given that opportunity.
Yeah, that makes sense. Because at the moment as well, I think this is made worse by the media, I think newspapers, all that type of thing. But what exactly is tax fraud then? Because I think nowadays people really don't understand the difference between tax fraud, tax avoidance and tax planning.
Okay. Right, so let's say, so tax planning is essentially where somebody sets up an arrangement in order to get the most efficient tax result that they can. Now, I suppose tax planning can lead to tax avoidance or tax evasion, but they're two very different things. So in tax avoidance, it's where you've made arrangements so that you're paying less tax, but actually you're not going outside the letter of the law. You are following the letter of the law correctly. Now, you might not be following the spirit of the law, which is another debate altogether, but technically, legally you're doing nothing wrong. You're just sort of bending the rules or finding loopholes to find a way to reduce your tax. Tax evasion is where there is a knowing and deliberate evasion of tax. So, I mean, the word fraud, it's very emotive, and that's one of the obstacles we sometimes find with our clients in dealing with COP9. Most people do sort of equate fraud to criminal activity, don't necessarily think that their own actions in not paying tax actually is criminal. Fortunately, it is, but people don't sort of have that connection in their brains with regard to kind of what they've done and it being criminal. What tax fraud is defined as by HMRC essentially is any sort of deliberate omission or concealment or misinterpretation of information or false or deceptive presentation of information in order to gain a tax advantage. So essentially, it's where you deliberately or knowingly are submitting tax returns or claiming repayments, possibly where you're not entitled to them or you should be, disclosing additional income, etc.
Yeah. So let's just say hypothetically then you've got someone that really knows nothing about tax, but they end up completing a tax return and it's completely, utterly wrong, maybe even negligently wrong, but there was no intent to do it wrong. Could that ever fall on the side of fraud or not?
No, for fraud, you can't accidentally commit fraud. So there does have to be some sort of deliberate action or knowledge. Now, it's not quite as black and white as that sounds. So, I mean, clearly there is, your very black and white scenarios where somebody very knowingly doesn't or decides not to include income, for example, in a tax return. But there's a bit of a wider view in terms of, so for example, I quite often deal with business people, maybe young entrepreneur and set up a business, has a great business mind, but just really hasn't given any mind to tax, and they've been making all this money, the business has been doing well, but they haven't even been filing tax returns. Now, they may not have ever sat down and consciously thought to themselves, I'm going to, I don't want to pay tax. I'm not going to, submit tax returns for the purpose of evading tax. But actually, HMRC would take the view was that a reasonable person should know that there's tax due on income, and you haven't, if nothing else, you've deliberately not taken advice or given it the due consideration. So that in itself would be considered a deliberate action. So you need to consider the circumstances carefully, decide whether you think there is actually tax fraud there or not.
Yeah, it sounds like that kind of element is definitely in the grey then, because whilst HMRC might take that view, it sounds like that is their view and it might not necessarily stand up in a court.
Well, obviously, every case is very, very different after the specific circumstances. But I think it's fairly well accepted through core precedents that sort of turning a blind eye to doing things that you probably should know that you should be doing would be considered as deliberate.
Yeah.
And for Code of Practice 9, and maybe we can talk about what that typically looks like, there does actually have to have been deliberate and admission of deliberate actions taken place.
Yeah. So what is it that prompts HMRC to open a COP9 inquiry?
Okay, so they can come from various places. I think I mentioned before that it might be that a more standard inquiry being dealt with by another part of HMRC has unearthed an issue that is more serious and they pass it on to the FIS team who opened COP9. It might be that HMRC have had some sort of tip-off or whistleblower. So we will quite often see a disgruntled employee who is aware of something going on in business that they make HMRC aware of. Divorce proceedings is another one. We sometimes get an embittered partner who likes to bring to light, offshore bank accounts, etc., to make sure that they're getting part of their full settlement and the tax then needs to be dealt with that. HMRC may have received information from another tax authority, or it might be that they're an inquiry into another taxpayer, which, the second taxpayer is dealt with, as they've been named in that, and they look at them via that. And of course, as I mentioned, these Code of Practice 9s not always instigated by HMRC. Sometimes you get clients voluntarily coming forward wanting to make a disclosure on the Code of Practice 9. I suppose the question is why would they do that? So again, number of reasons they might want to do that. You might have somebody who runs a business and there's succession planning, looking to hand a business over to their children, for example, and they want to make sure that they're not leaving their children with some difficult scenarios to handle. it might not be a business, but it might be somebody who's sort of coming to the end of their life, and again thinking about inheritance and handing over. They might again have an offshore bank account that nobody knows about, and they don't want their children to have to deal with that after they pass. So they want to get their affairs in order. Another common one is if you have somebody who's selling their business, who knows that they have been doing something which has impacted the taxpayers. One example, that might come up as part of vendor due diligence, but one example I came across involved a gentleman he had a business that he was selling. He had been not putting all of his sales through the books and sort of putting that money, and I think it was cash, into his sort of personal bank accounts. He thought that by telling the prospective buyer about this, that he was demonstrating that the business was more valuable than it might appear from the books and records. What actually happened was the prospective buyer then tried to blackmail them into selling the business for a much lower price, and told him that he was going to go to HMRC and tell them all about it if he didn't sell at the lower price. Backfired on the blackmailer because the business owner decided to actually go to HMRC himself. But that was quite an interesting case.
Yeah, no, sounds it. So really then, I think there's two options. HMRC have almost given some information rather than them going out to try and find people who might have committed tax fraud. And then secondly, it's taxpayers just openly going up front to them for one reason or another.
It can be either, actually. HMRC have access to an awful lot of data these days, and they do a lot of data analysis. And, they do run campaigns where they will look at a particular business sector and they'll compare, the records of a business to what's typical. And if they think that something looks awry, they might open an investigation, which may or may not end up in COP9. So they do work to look for people who are committing fraud, but a lot of the cases that come from, as I say, tip-offs or other information they've gained from elsewhere. So would you like me just to run through kind of what a typical inquiry looks like?
Yeah, please. Yeah, please do.
Okay, great. So as I mentioned before, it can be instigated either by HMRC or the taxpayer. In either scenario, HMRC, if they consider Code of Practice 9 appropriate, they will issue or offer the file letter, the chance for the taxpayer to enter into the contractual disclosure facility. So this is a contract which gives the taxpayer the ability to disclose all their affairs, if there are irregularities. They do have to admit to some form of deliberate behaviour in order to be able to enter that facility. But in doing so, there is, as I say, this guarantee that they won't be prosecuted for evasion. It will be dealt with civilly, so they won't end up with a criminal record. So HMRC will issue the offer letter, and then the taxpayer has a decision to make, essentially. They have 60 days on receipt of that letter to either accept the offer, so admit, I guess, that there has been some form of deliberate behaviour, so you can accept that offer and enter into the contract, or you can choose to reject the offer. So if you do not believe that you have committed fraud, if you, having given due consideration to all the facts and taken advice, you think that fraud is not something that has actually happened here, then you can actually deny and decline the offer to enter into CDF. Now, if you do that, it's called the denial route. I suppose there's two options then. So you can deny the fraud, but still cooperate with HMRC. Now, you're not under COP9 here because you're not under CDF because you've denied the fraud. But if you cooperate with HMRC, you'll still get a better result at the end of the day should you be found wrong. Of course, you can not cooperate or not even reply to the letter, in which case HMRC will consider that you've chosen to go down the denial route, to say. In either of those cases, as I say, you lose the immunity from criminal prosecution. HMRC they will conduct their own investigation with or without your cooperation, and they could choose ultimately to enter or to open a criminal investigation if you thought circumstances were fitting. Now, of course, if you accept the offer and admit that there has been some form of deliberate behaviour, then the next steps is to produce an outline disclosure for HMRC. Now, I should probably just point out at this point that if you do admit to tax fraud and enter CDF, this opens up 20 years of your tax affairs. So you do then end up looking at quite a chunky period of time. So that's really important to think about and to consider. We'll probably talk a bit more about the risks there afterwards. But just going back to the outline disclosure. So the first thing you submit to HMRC is the outline disclosure. This is a fairly high level description of what the irregularities are in your tax affairs. And that will include the tax loss that's arisen due to your deliberate behaviour that you're admitting. But if there is anything else in your tax affairs that hasn't been correctly dealt with, either deliberately or otherwise, that should also be disclosed or outlined on this outline disclosure form. Assuming HMRC consider that disclosure or the outline disclosure to be complete, then, well, in very exceptional circumstances, it might be, if it's a very, very simple matter, the disclosure can be made or the details can be provided very quickly and payment made and the case settled. But actually, in most cases, there's a need to prepare a much more detailed disclosure report, which covers, as I say, the full 20 years, just considering any areas of the tax affairs or the taxpayer that might need consider. And HMRC will generally expect you to sort of delve into sort of personal and business to really sort of bottom out any areas where there might be some inaccuracies.
Mm-hmm.
Yeah, of course, if you submit that outline disclosure and HMRC don't think it's complete, so that's because maybe they have information that they hold that they think is an irregularity that you've not disclosed, they can reject that outline disclosure. And then they'll go down the non-CDF route in terms of their own investigation against, again, you lose that immunities for prosecution.
Yeah, this part seems really hard, doesn't it? Because how many people really have the records going back 20 years to know for sure what they didn't do? Right? So I'm guessing people can not unintentionally maybe not disclose everything that was an error, right? Because of that. Does that happen?
It does happen, and I think part of our role as advisors is to sort of help guide our clients through that. I mean, we obviously know there's some very common situations that arise that lead to tax inaccuracy. We can sort of delve and really explore whether any of those apply to an individual. But equally, there is an element of, sometimes we do have to rely on recollection to the extent we can get any records to back up any part of the tax affairs we do. But, sometimes we have to recreate the numbers in terms of using sort of judgments, any available knowledge about sort of what was happening in the marketplace. If it was a rental property, for example, where we were looking at what rental income had been received, we might consider what the average rates were in that year. So sometimes you do have to sort of recreate the numbers and come up with a sensible best guess, which obviously, you discuss with HMRC and you agree that approach, but records aren't always available. But it is really important to really be robust with clients to make sure that you're getting to the bottom or identifying absolutely anything that you possibly can that might be out there.
Yeah, that must be tough, to be fair. It must be a pretty chunky piece of work then, actually, to make sure that you go through everything with a fine-tooth comb, present something that's reasonable and unlikely to be disagreed with by HMRC.
Yeah, absolutely. It's a balance, isn't it? So obviously we want to get the best result for our clients, but that has to be in a sort of an appropriate and reasonable fashion. You don't want to be preparing a report with numbers and sending it to HMRC that they're going to sort of laugh you out the door at, and they're just not going to accept, because that just nobody's credibility any good, and it just prolongs the investigation. So it's about getting that balance right. And of course, HMRC, you can't horse trade with HMRC. They have something called litigation settlement strategy in place. So any agreements you make, the numbers you come up with and agree with HMRC have to be based on some sort of sensible calculations and assumptions and interpretation of legal facts and matters.
Yeah. Yeah, prior to this conversation, I really didn't clock the 20 years point anyway. That's the bit that I've kind of stuck on, because I didn't realise how many years people would have to look at where they're going down this route. If I'd have sat back and thought about it, I'd have probably come to the answer, but yeah, it didn't immediately come to me. So that's, I suppose that's why COP9 needs dealing with care and usually with specialists then, isn't it, really? Because it's such high risk of getting it wrong or getting into a position where HMRC ends up refusing your disclosure and therefore has to go down the full criminal route, not the civil route.
Yeah, absolutely. I mean, there's a number of sort of pitfalls and risks throughout the entire process, but certainly the length of time the inquiry is going to cover is part of that.
If you listen to the podcast on Apple Podcasts or Spotify, I have a favour to ask you. Would you please leave me a podcast star rating on those platforms? If you use Apple Podcasts, if you could take it one step further and leave me a written review, that would be even more appreciated. Leaving ratings and reviews helps people to find the podcast and increases the chances of new listeners giving it a go. There are details and links in the show notes that explain how to leave the ratings. It won't take that long. The show notes are at thetaxprofessionalspodcast.com/TTPP111. Back to the episode. Yeah. So what are some of the frauds that you've seen then through the COP9 route? I'm sure there's some that are like typical and maybe some that are a bit more out there, but like, can you share some examples that you've seen through your experiences?
Yeah, okay. So some very typical examples. We will often deal with owner-managed businesses where the owner director has been putting personal expenses through the company books and records. That's very, very common. I suppose cash businesses, you quite commonly see examples and scenarios of businesses where not all the takings are being recognised through the accounts. So that could be restaurants, pubs, bars. Scrap merchants, I've had a few cases actually with scrap, which is often dealt with in cash where those haven't been gone through the books. So those are quite common. Any offshore assets, so individuals who hold any sort of asset, whether it's bank accounts, property, trusts offshore, those historically have quite often been kept off people's tax returns. So that's very, very common. I guess probably more common than people might think is internal fraud by directors within sort of businesses. This is where we're dealing with businesses, large or small, to be honest. So quite often, if there's been, these come to light where there's maybe been a change in personnel or a business is being sold and due diligence has picked up on it, or that actually there has been a director in the business who's been committing some sort of fraud. Now, the thing here is a lot of people don't realise is that if you have a regular employee who's defrauding the business, the loss to the business is allowable as a tax deduction. That's an employee theft. But a director, statutory director, is not considered as an employee, and therefore the impact on the business does have to be considered. So if you've got a director who's not been recognising all profits, then obviously the company's been paying less tax than they should have. So you need to think about all those sorts of things. So actually, my very first case involved a finance director of a business. She was the most senior person in the UK. No one was really overseeing her. And over a number of years, she put hundreds of thousands of pounds of personal expenses just through business expenses and had those repaid. So she was, that was my very first case. Had another one in more recent years again. Finance director, been with the business for decades, really respected. Nobody would ever have thought this guy was ever going to do anything wrong. But it turned out that he had been colluding with the customer to agree the favourable prices for that customer. It was a really cliched, backhanders, cash in a brown envelope scenario. Been running 2 sets of books and that all came out and was looked at. And I suppose we get quite a number of cases where either an individual's never filed returns. So again, sometimes, you get these sort of young entrepreneurial, great businessmen who move on with their business, make lots of money, and they don't sort their tax out. And or you get an individual where there's been an event, maybe some sort of traumatic life event, which has coincided with, I don't know, maybe some sort of income that's been missed off their tax return, and then they don't file a tax return, and then they know they need to sort it out, but maybe a year passes, maybe 2, and it just all gets harder and harder to deal with. And the thought of just dealing with it, people just stick their head in the sand. So I get scenarios like that where it suddenly comes to light and we're like, well, why didn't you do something about this 4 or 5 years ago? And it was just too hard. So that was quite a regular occurrence as well.
Yeah, it sounds like actually there's quite a few people that fall into there almost by accident or by having decision paralysis, not knowing what to do, not knowing how to solve it. So they just bury their head in the sand rather than intentionally do something wrong. They just intentionally don't fix it instead.
Yeah, that is that. And again, that will be considered as deliberate and Code of Practice 9 will often be considered the appropriate route for that.
Yeah, I can see now actually then why, because I think you mentioned this to me when we first spoke, but some people find it hard to admit up front that they've done something wrong with the word fraud stamped on it. And I kind of understand now more why that happens with some of these circumstances, because they're not going to see themselves as acting like a criminal, are they, in those cases? But they're going to have to essentially admit to it to get the COP9 route to them.
Yeah, absolutely. I mean, I should, say it is really important. In some cases, it is right to go down the denial route. In some cases, that is the correct route, and you do have to think about circumstances. But actually, in a lot of cases, if HMRC have issued COP9, they do know about something. They won't necessarily tell you what it is. They'll tell you asked the question before. If they let you know they're investigating you, yes, they absolutely will, but they won't tell you what it is they know. That's for you to put on your outline disclosure and disclose to them. So, yeah, so that point of fraud, it's, as I say, you really need to think about whether it is appropriate. In a lot of cases, it will be, and it does. This immunity from criminal prosecution is a big deal. It's the real main advantage of getting COP9. So, to the extent that you think HMRC might ultimately decide that there's any deliberate action here, that is the route you should take. Because, apart from anything else, apart from the potential criminal prosecution, if you went down a denial route but cooperated with HMRC and ultimately there was found out to be a tax liability due, and HMRC's view was that it was deliberate, well, they may not criminally prosecute, but your penalties are going to be higher because you denied it in the first place. So there's a number of things you need to think about other than the criminal prosecution piece.
Yeah, interesting. So actually then, just summarising my understanding then of some of these things. So if you go down the COP9 route, the benefit really is you don't get the criminal prosecution, but I suppose the negatives are that you're admitting to fraud, so therefore it's 20 years that they can go back and look at.
Yeah.
You're also admitting fraud, so that means deliberate penalties, so up to 100%. I think it's somewhere between 70 and 100, just off the top of my head, if they help with the disclosure.
Yeah, it can be up to 200% actually if you've got an offshore element to that. 100% if we're talking about all UK issues, but if it's an overseas issue, you can actually get up to 200%.
Okay, so those ones with the offshore piece as well, then it can be even higher then. So that's obviously like the downside of it. So then I suppose people who are like thinking, well, I don't think I actually did anything fraudulent, and they're thinking to deny, then they want to be pretty sure though that they're right with that, so that, I suppose they can disclose without all the negative parts of COP9.
Yeah.
They don't need the positive side of it, right? If they haven't actually committed fraud, the positive side is that they can't be criminally prosecuted, but that's redundant if they've never actually committed fraud in the first place.
Yeah, absolutely. If there really hasn't been fraud, now I have to say you have to explore the circumstances in detail. But if there really isn't an argument, or we very, very strongly disagree with HMRC's view that there's been deliberate action, then the denial route can be the right route with cooperation. I always advocate denial with cooperation. But as I say, when HMRC have issued a COP9, it's more often than not there has been something that we would consider HMRC have a justification for a labelling as deliberate.
Yeah. So I suppose really then, if anyone is thinking about going down the denial route, well, it's even both routes really, but if they're going to go down the denial route, they should probably get advice first from a TDR expert like yourself. Just to make sure that is the right choice for them. So it's almost like get advice when you're making the choice, and then whatever choice you make, get advice after that too to do the resolution piece.
Yeah, absolutely. I mean, that advice, to say, can be completely in two stages, but I think anybody who receives a COP9 letter, they really should be trying to talk to somebody who has experience in Code of Practice 9 cases. And actually HMRC, in their Code of Practice 9 booklet that they issue with the letters, they do strongly recommend that people take advice from somebody with Code of Practice 9 experience.
Yeah, in particular. Well, there's a lot of intricacies to it, isn't there, that non-specialists might not appreciate.
Absolutely.
I know we've touched upon probably quite a few of them already, but are there any other risks, I suppose, associated to going down the COP9 route, taxpayer or to their advisor?
Yeah, I guess that that there are potential pitfalls all throughout the process, and the whole process really needs careful management. I mean, just thinking about your clients at the outset, for clients is invariably a highly stressful situation, and they will remain stressed for the entirety of the investigation, which can go on for years. These COP9 inquiries, I would say average length of between 18 months and 3 years. They can go on longer. So this is something which is, on the client's mind for quite a lengthy period of time. So your clients themselves need careful managing. They will have some interaction with HMRC. We try and limit that very much to the very beginning and the very end. But in the interactions they do have with HMRC, you need to, it needs to be absolutely properly, but you need to make sure that, emotions aren't going to be running high, that's all dealt with. You need to manage their expectations around penalties. And there are other impacts of admitting deliberate default as well. So one of those is that you'll invariably be placed on the Managing Serious Defaulters program, which means you get a little more scrutiny of your tax affairs for a number of years. HMRC can, in certain circumstances, also publish the names and details of serious tax defaulters. So, clients need to be aware of all these things, and the advisors need to be mindful of these things as they progress through the inquiry, to make sure they don't make any decisions that could impact those negatively, but they don't need to. I suppose another point on the clients is we very often deal with clients who are so these are people, maybe they have mental health problems, or drug or alcohol addictions, or some forms of illness. So those sorts of things, and the and how HMRC will deal with those cases need to be carefully managed. So, knowing that, for example, HMRC have an an extra support team you can call on to support those sorts of clients is very useful. I suppose the big risks, I think we might mention some of these, but completing the outline disclosure in the first instance, I mean, the risk is there that you miss something off. HMRC do expect, outline disclosure to ideally cover everything that you're planning on disclosing. Now, invariably, we've talked about 20 years, invariably, and then quite regularly, we do come across in the course of our inquiries an additional extra, something the client had forgotten about the outline disclosure. So you need to carefully manage that. It's about, keeping HMRC informed and being able to, really explain why it wasn't on the outline disclosure. And then I suppose ultimately, the disclosure report that you submit, again, making sure that is complete and that to the best of the knowledge of the client, that it contains absolutely everything that they can call or have knowledge of that could impact their tax affairs. Because at the end of the inquiry, when you submit that report, you also have to submit a number of official documents. They are very important. Some of them come with warnings that if they are completed inaccurately, could still lead to criminal investigation or criminal prosecution. So there's many sort of pitfalls and risks throughout the whole process that really need to be handled and managed very carefully.
Yeah. I suppose on the point of, not everything being in the disclosure, then I suppose there could be error on both sides, right? On both the taxpayer and the advisor in these circumstances, because, well, the taxpayer side is obvious. They just don't tell you something or they don't give you something. But I'm supposing there could be instances where the advisor has been given some information or has a document and just misses something as well.
Yeah.
Yeah,
and I mean, that's always a risk to advisors, isn't it? The risk that your client could take legal action for something you've missed, or equally, you do also still have to be mindful of what HMRC are entitled to, and there's potential that you provide documents or information that HMRC are not entitled to as part of that. But medical records is a key one. There's some quite key sort of guidance and rules around when you need to provide medical records. So it's about there are risks there for the advisor in providing the right information, not providing the right information. There's a lot of elements to that.
Yeah. So the reason I'm thinking about it is because, well, I was actually having this chat yesterday with two separate people and they both were saying the same thing, both in private client tax they were. So one of them seeing a lot of IFAs providing tax advice, which is turned out to be wrong inevitably.
Yeah.
Someone else is seeing like accountants going above and beyond, I suppose, what their knowledge is, and again, providing tax advice, which inevitably has ended up being wrong. I just think there's so many people out there that think they can deal with stuff, and it's mainly because they probably just don't have enough knowledge to know that they might be wrong. But with things like COP9 in particular, like it's so high risk, it's not even worth just trying to do it.
Right, and it's it's not something that comes across the average advisor's desk on a daily basis.
No.
They don't, and they're not that pleasant that you'd see them regularly. So the most advisors in actually dealing with these as your specialist in technical specialism, not something you're going to be dealing with every day, and you're just not going to have that level of experience and knowledge of of how they should be handled. And I do really recommend that specialist advice is taken.
Yeah. This is one question that I think you might have answered, not explicitly, but can COP9 then apply to businesses as well as individuals? Because you mentioned about like OMBs and some directors that are like almost abusing their power in companies. So can the COP9 be against the person and the company, for example?
So a COP9 can only be opened against an individual. You can't open a COP9 on a company. But where a COP9 is opened on an individual, it will then encompass any businesses that they are involved with in terms of shareholdings, ownership, director, beneficial ownership, that sort of thing. So if there's an issue in a company, the HMRC will generally open the COP9 on the most relevant individual, whether that's one of the directors or the directors, etc.
Yeah, interesting. I mean, this isn't exactly on the topic of the episode, but like because all this is so high risk, obviously, like, can you really get juniors that involved in a COP9, or does it have to be dealt with like with people of sufficient experience and seniority, really?
So we involve juniors, obviously, from the start. I mean, it's nothing else. Note-taking was really, really important to have detailed notes of every meeting you have with your client and HMRC, so they can most definitely get involved. But obviously, you need senior input all the way through at a level more I suppose more prevalently than you may do in other areas of tax. We would always have senior sign-off of any communication, senior representation in any meetings. And in BDO, we actually have a license holder regime. So only individuals within BDO who hold a TDR license are able to sign off on any TDR work.
Yeah, interesting. I was mainly thinking about, I suppose, like delving into the documents in the file, because if let's say you've got someone with, like, I don't know, 1 year experience going through that file, they're probably likely not to pick everything up.
Yeah, absolutely. We have to be careful about. I mean, there's limits to what you can ask somebody who hasn't worked in a COP9 inquiry before to do. But there's always something that can be done at a junior level, albeit with oversight by somebody who really does know what they're doing when he's looking for.
Yeah, no, it makes sense. So you've obviously dealt with a lot of COP9 over the years then, and
Yep.
you might have some kind of stories yourself where you've seen it go wrong, not because it's your fault, but because it's the taxpayer's fault. But like, what kind of disaster stories and have you come across in your career then with COP9?
Yeah. Thankfully, I've never had a case which is actually a disaster, but I've had well, at least one that's come quite close. So one particular example, so we're dealing with a gentleman. The main point of the inquiry, I think, where HMRC had got interested, was it had come to light that he had an Isle of Man bank account. So that was the main focus of the inquiry to begin with, and we were looking into that. Now, as you need to do in all these cases, we were doing a full review of the transactions that had gone through that bank account with all the statements, etc. And clearly we had to look at all of the elements of his business, etc. as well. So a lot of work had gone on, and we were quite a way down the line. The report was quite well drafted. From the Isle of Man bank account, then we did notice a couple of transactions that appeared to be coming from Jersey. And when we queried the client, it became apparent that he had a bank account in Jersey, which he hadn't told us about. So, obviously we had a conversation then. So, really should have told us about this bank account, but we can deal with this. The report's not got in. So we went to then do the same sort of analysis, I guess, on the Jersey. I mean, he had told us that there wasn't not much going on there. It's just the account he had set up, very little, et cetera, et cetera. So, but obviously we said, well, we need to approach the bank and we need to ask for against statements, etc. We really struggled to get anything out of that Jersey bank. We tried and we kept pursuing it. And eventually, I'd say in the meantime, we're writing the report and we're kind of getting there, assuming that we know everything that's going on. Eventually, we did get a bank statement from the Jersey account. And as I say, there wasn't huge amounts going in and out. But we did notice there was one amount coming into the account of, it wasn't huge. I think it was about £1,000. The narrative, it wasn't clear where it came from. It's from many years ago. The client claimed not to recall what it was. We could quite easily, as I say, very close to submitting the report, we could have put this down to, well, this is £1,000. Not a huge amount of money in the scheme of things. It's not known. It could have been anything really. Let's let it go. But we were pressed. We just felt there was something about this that we just wanted to make sure. So we kept pressing. And it came to light that actually this £1,000 had been paid, and we eventually got a baffle documentation which showed that it had come from a Swiss account in our client's name that we didn't know about. At which point we had to have a very, very strong conversation with our client to say, look, you've got to tell us everything now. We were about to submit a report that was not going to be complete or accurate, and you could have been criminally prosecuted. So you've got to tell us everything. So he gave us access to his Swiss bank account, which had over £3 million in it, with all the interest and et cetera that had gone through that. So we kind of had to start that report again from scratch and really go at it. Now, as I say, thankfully, we identified all of that before the report went in. It still wasn't great in terms of HMRC. We had to tell HMRC quite late on that we'd identified another account. So they could have, and they would have been within their rights, because it wasn't in the outline disclosure, they could have instigated criminal, just pulled out of CDF and instigated criminal proceedings at that point. But luckily, we'd built a good rapport with them over the course of the inquiry, and we persuaded them that that was not necessary and that the client was going to pay everything due, etc. So we managed to get that report in, ultimately complete, and the client was okay and avoided a criminal prosecution.
Just baffling, isn't it? Like, what do you think was going through that person's mind then to keep not telling you about these bank accounts? I'm presuming the Swiss one was the last one that you found.
Yeah, the Swiss one was the last one. And I think you do get certain individuals who will second guess. They will try and second guess what HMRC know, what they don't know, and will just continue to try and get away with things if they think they can. It's a risky game to play. But I think that was the client. He obviously knew that bank account was going to cause him a much larger tax bill than all the other bits we were looking at, and he just didn't want to. He just wants to find out. And actually, when we eventually sort of got to all the correspondence from when we found the Swiss bank account, we then sort of opened up the communications with Jersey, and we actually found out there was a file note where he had actually told the Jersey bank not to provide us. So that's with information, which is why we've been struggling to get anything out with them in the first place, is because they'd been trying to. So that was a rogue client, I think, in that case.
Yeah.
Well, I suppose if anybody wants another example of where something's gone seriously wrong, and this was not one of my cases, of course, but it's a very well publicised Bernie Eccleston case. So it would appear that Mr. Eccleston was under Code of Practice 9 investigation. It would appear that as part of one of the interviews he had with HMRC, within that, they asked him if he was a settler or beneficiary of any offshore trust, which he said no, and that turned out to be inaccurate. And that did lead to Mr. Eccleston being criminally prosecuted. So he's now the proud owner of a criminal record, albeit he got a suspended sentence due to large, I think, his age and health. But yeah, it's, that's a very public and well publicised evidence, I suppose, of a situation where you can see where COP9 has gone very wrong for somebody based on them not being sort of fully transparent in the process.
Yeah. I mean, for someone like him, do you think that he had such complicated affairs that he genuinely didn't know the right or wrong answer to that? Do you think that's possible with some people, actually more wide than just someone like him?
I couldn't possibly comment on Mr. Eccleston's situation. I have no idea. He did have very complex affairs, so I guess it is possible. And, there is always the possibility, yes, for any individual that they will genuinely forget something or not know the answer. But again, if that's one of the things I mentioned earlier about managing your clients is around prepping them for HMRC meetings. So, we always stress to our clients that if you're asked a question, because people do feel the need to respond to HMRC in an interview, if HMRC asks you a question and you don't know, you're not 100% sure, then you say you're not sure, we'll look into it and get back to you. You don't say, you don't get to give definitive answers if you are not 100% sure.
Yeah, I suppose that's wider, isn't it, than just COP9 as well, because I give the same advice to clients when we're dealing with employment tax inquiries.
Yeah, absolutely.
Yeah. They also...
And something, HMRC, write it down and they will use that. And it's then hard to say, well, actually, the client made a mistake. You didn't, worry.
Well, yeah, and at that point, it looks like the client's lying, even though they might not have seen themselves as lying, but HMRC could see it that way, couldn't they? And in a COP9, you can see how that could just spiral very quickly for them to, I suppose, pull the possibility for them to go through COP9.
Yeah, absolutely.
Yeah. Interesting. What have you ever come across then, I suppose, any people who aren't COP9 specialists that have tried to deal with it, and like what mistakes they have made, or if not, what typical mistakes you think people might make if they try to deal with it?
Yeah, I mean, we've picked up COP9 cases that have been started by what I'll call a dabbler. Somebody who's maybe it's been their standard client and they've tried to take on what they're doing. I mean, I think typically mistakes are, I guess, not being or appearing to be cooperative with HMRC or taking an overly aggressive stance. It's generally not the right thing to do. I think the more cooperative and the better relationship you can build with HMRC in dealing with this, the better. So, that's an issue before. We've seen situations where just being very aggressive to HMRC has led to problems from the outset, and actually a changing advisor can be very, very good at that point to sort of make that go away. Again, not being robust enough into sort of the full tax affairs of your client. So it might be that, the client receives a Code of Practice 9 and you ask them if they know why they think they've got this, and they immediately tell you they've got, I don't know, some properties overseas that they're not being declaring rent on. And some advisors will, stick with that, and that's what the route they'll go down, and they'll assume that's a problem. But that might not actually be the thing that HMRC know about or have got hold of. So you need to be, it's that level of robustness and really knowing the sorts of things that, HMRC typically have found out about or know about, and delving in and really understanding the affairs of your client to make sure that you're not missing something. Those, I suppose, are the key things. It's missing, ending up not submitting a complete disclosure or outline disclosure in the first place. And I suppose the other thing is just not having that awareness or thinking of the other implications, sort of the penalty implications, the publishing of records throughout the dealings, leaving that all to the last minute, and then realise that you said something or done something which kind of puts you in a position which is hard to get out of. Clearly penalties, things like publishing details, that all comes down to sort of facts, etc. And you can't change facts, but there are, and I mentioned before, HMRC have to settle cases within their litigation settlement strategy, but there are things you can do, negotiable points, etc. And you just want to make sure you don't prejudice the penalty position or the publishing position as part of those discussions.
Yeah. So I suppose if we have to summarise, then it's almost like mistake number one is not looking after the relationship with HMRC, so getting aggressive and letting that go sour makes it more difficult. Two is not, I suppose, being thorough enough when doing the background findings and putting the disclosure together before it goes over to HMRC. And the third one is, I suppose, not controlling the information that's given to HMRC so that you potentially prejudice something in the process. Yeah.
Yes. Yeah.
So we've talked about disasters then, and I think probably throughout we've touched upon all the things that you can do to prevent getting to that position where it's a disaster. But if you could just summarise then, like how can people prevent COP9s ending badly?
So to summarise, and I think, this is all areas we've covered, it's about taking it very seriously, understanding that, this is a serious process you're entering into, and being as open and as transparent as you can be with regard to your affairs, whatever business affairs you've been involved in, with taking the right advice to make sure that you're exploring any areas and identifying any areas that you think HMRC might have an issue with. So it's really about being, it's that relationship with HMRC, nurturing that within the process, and making sure that you're not leaving something out of your disclosure.
Yeah. So one final question then for you, Lucy, then. So should COP9 inquiries always be handled by specialists?
Well, I would certainly recommend that special advice is sought, and I know that mirrors HMRC's recommendations in the Code of Practice 9 booklet. Now, clearly I'm a COP9 specialist, and I'm you might think I'm a little bit prejudiced in responding to that, but I suppose one thing I would point out is that as a COP9 specialist, that doesn't necessarily mean that I'm sort of looking to come in and take over a full relationship with the client. We do often work alongside our clients' regular advisors, helping them to manage the process and then stepping away at the end of the process and making sure that relationship is maintained, that the client then moves on with the rest of their life, I suppose, with their regular advisor in place, and we would step away at that point. So we can work in a more sort of consultative role just to make sure that taxpayers can harness that specialist knowledge, but without losing the relationship with their regular advisor.
Yeah, which makes sense. And I might be wrong in presuming this, but I presume a lot of your work comes from other advisors referring it into you rather than the taxpayer coming directly.
Yeah, quite often that is the case. We will get advisors who come to us and they identify that this is not something they're used to dealing with, and they do need some help.
Yeah. So for people who want to maybe get in touch then, Lucy, or even learn more about you, like where are the best places for them to go?
Okay, well, you can learn more about the video TDR team generally from our website, which is www.video.co.uk, or I can be contacted directly either via LinkedIn or via my email, which is lucy.sauvage@video.co.uk.
The big takeaway that I've taken from this episode is that if I come across a client that's being involved in tax fraud or is being offered COP9 by HMRC and specialist support is needed, there are so many risks for the client and for the advisor for getting this wrong, and the client deserves appropriate specialist input to put them in the best position. Show notes for this episode can be found at thetaxprofessionalspodcast.com/TTPP111. Show notes include the links mentioned throughout this episode, including to our masterclasses for tax professionals, contact details for Lucy, contact details for me, and details for how you can leave me a rating on Apple Podcasts or Spotify. If you've not done this already, please do me a favour and leave them on, as this will be hugely appreciated and will help me to get new people to listen to the podcast. If you enjoyed this episode, you can head on over to thetaxprofessionalspodcast.com/subscribe to sign up for email notifications of all future episodes. Episodes are bi-weekly and released on Mondays. But that's it for this episode. I hope you found the episode useful and have taken away some useful points to help you to progress, develop, and improve your tax career. Until next time.